Hey, good evening, traders. This is Jeff from Zen Trader, and this we have is a 60-minute chart of the Nasdaq. And as you can see here, there's just chop, whipsaw, and it's just been a very boring month of trading, in my opinion, as we've been stuck in a little bit of a range. However, out of all of this chaos, it does seem that there is a pattern appearing, which kind of coincides with my bearish market timing signal, which got triggered on the 11th. So the next day was a gap down, and then it rallied, and this rally was weak, and the reason why is it found resistance right at that 60 level. It failed to really break through that. And the pattern is emerging, which it's not the most clearest pattern, but it is there. You know, you've got left shoulder, a head, and a right shoulder, which if you follow my imaginary line right there, we're right at the neckline currently, and it is setting up nicely for a potential gap down Monday. Maybe we'll see some more follow through, which the markets have severely been lacking lately. It seems like every time the markets go one way, we go down here, the next day we gap up. We go down here, the next day we go up. A little bit of follow through there, but essentially we have just been chopping. But the one constant throughout all of this is the resistance around the 60 level, and we actually have a bearish head and shoulders pattern forming on the RSI as well. So this is definitely going to be something to watch. Now, if this pattern doesn't follow through, then we may have, you know, some strong up move coming. Basically, if this pattern fails to come to fruition, then the opposite will most likely, there'll be a powerful move in the other direction. With this chart, this is essentially the major indexes of the world just overlapped, and you just kind of get a nice visual in terms of which markets are outperforming. And as you can see, the Nasdaq has really outperformed, and essentially it really took off here a year ago, and you know the other ones did too. The HSI has really kind of languished and gone sideways. But essentially none of them have performed as well as the Nasdaq. So essentially there is a lot of room for the Nasdaq to fall and to not really disturb the uptrend that we're in. We're essentially right at highs, whereas the TSX has really underperformed over the last couple months, mostly due to the commodity meltdown. The FTSE has gone sideways, and it looks like it's finding resistance, and it looks like it's starting to roll over. And the DAX has been a decent performer over the last year. You can see basically rallied strongly, had a sharp correction, and then got all that back. So but my point in showing you this chart is that the Nasdaq has been such a strong performer, and it literally has basically some cushion in terms of it could fall 10, 12, 13% and still be fine, you know. And that's not reassuring if you're heavily long, in my opinion, at this time. I think there's a lot of things going against this market. And then the last thing I wanted to point out here was copper. I had drawn this chart here a couple of weeks ago when we were in this right about the 1st of May, I remember. And what I was pointing out then was the areas where we were finding support and resistance. And I suggested to keep an eye on this chart for the future direction of the markets as a key indicator of the health of the overall market. And essentially, we are in a strong uptrend. Strong downtrend according to the ADX. And I mean, you can just see this as we broke down out of that support, out of that range, and now we're under the 200-day moving average. Not a good place for this to be if you want to gauge the health of the overall market. So keep an eye on this. Have a good weekend, guys. We'll see you back here on Sunday, maybe with another video update.